Welcome, dear traders. At the end of the week, traders are rather cautious. They took notice of Wall Street's overnight losses. Asian stock markets are also falling today. Trading sentiment on the stock exchanges has changed again following the Fed's comments on a monetary policy. Find out which factors are impacting currency pairs in our video review of the Asian session. Let's start. Apparently, investors are still uncertain how aggressively the central bank is going to raise the interest rate to cap inflation. On the one hand, the main indexes that track inflation showed a decline in July. It increased the likelihood of a 50 basis point rate hike in September. On the other hand, anything may happen until the FOMC meeting scheduled for September 21. Prior to this meeting, a batch of fresh inflation and the labor reports for August will be released. The Fed will also pay attention to other macro stats. Currently, the majority of Fed officials are backing aggressive rate hikes. Yesterday, the president of San Francisco rejected the possibility of a less hawkish stance. Daly said that a 50 basis point interest rate hike in September makes sense. However, she has an open mind on the possibility of a 75 basis point hike. Since March, the Fed has already raised the key rate by a total of 225 basis points. It's also planning to lift rates to a target range of 4% by the end of this year. Following Fed policymakers' warnings about excessive optimism after a slight decline in inflation, investors revised inflation prospects and locked in profits. And a consumer price index dropped slightly in July to 8.5% in annual terms. The producer price index also decreased by 1.1%. 2.5% on a monthly basis. Therefore, many traders assumed that inflation has finally perked. However, analysts warn that it's too early to rejoice, as this data may be misleading, especially given foreign energy prices. Besides, the Fed pays great attention to the Core CPI Index. The regulator makes its long-term forecast with this index in focus. Besides, Daly stressed that consumer prices are still growing at a rapid pace. Excluding volatile food, housing, car and energy prices, the Core CPI Index tumbled to 6% in July from a 6.1% in June annually. It was the largest increase since October 1982. Even despite positive CPI and PPI data, the rally in the markets turned out to be short-lived. As traders have started to realize that the Fed has lots of work to do before taking inflation under control, the US dollar has regained ground. The two-year government bond yield advanced today to a two-week high. Like the US currency, US treasuries are also considered safe haven assets. The greenback faced a strong bearish pressure twice this week following the release of the CPI and PPI indexes. Nevertheless, it managed to resume an upward movement amid the Fed's hawkish rhetoric. Since March, along with the growth of the benchmark rate, the US dollar index has already jumped by 10%. In the Asian session, it was trading at the level of 105.29, moving in the price corridor of 105.09 and 105.39. As the euro is weak now, the US dollar may move even higher to the resistance levels located at the recent highs of 106.93 and 107.43. The yen is again declining due to the growing US dollar and to the Fed's commitment to a hawkish approach. In the post-holiday trading on Friday, the dollar-yen pair fell to 133.26, What's more, a new increase in the US Treasury yields widens the gap between the US and the Japanese interest rates, pushing the pair to the intraday range of 132.86 and 133.49. The Bank of Japan is expected to continue easing monetary policy according to Abenomics principles. The legacy of Abenomics will continue long beyond the life of its architect, former Prime Minister Shinzo Abe. He died recently after being shot during a campaign speech. Current Prime Minister Fumio Kishida is sure to stick to the same approach, so the yen is likely to remain weak because of the ultra-soft monetary policy. The Australian dollar has already gained almost 3% this week. It maintains its bull run amid rising prices for copper, iron ore and coal. Oil prices are also showing signs of recovery, and the Aussie as a commodity currency edged higher against most of its counterparts despite the worsening of the coronavirus situation in China. The AUD USD pair reached 0.7120 in the Asian session. It's now trading in the range of 0.7089 and 0.7130. A new June high may be located at 0.7283. Meanwhile, the Kiwi also climbed by more than 0.5% against the US dollar on Friday. It was able to consolidate at 0.6445. And the Reserve Bank of New Zealand will announce its rate decision on Wednesday, August 17. Macro stats published today showed that inflation has not perked yet in the country, and the food price index rose to 2.1% from 1.2% on a monthly basis. The manufacturing sector moved into expansion territory in July, growing to 52.7 from 49.7 in June. And for this reason, analysts expect a 50% rate increase or even a 75 basis point hike. The NZD-USD pair is trading today in the upward channel of 0.6426 and 0.6470. And that's all for now. The trading week is coming to an end. We hope that it has been a productive week for you. Perhaps you have even opened a few profitable trades thanks to our video reviews. Subscribe to our channel and stay up to date with the latest market news. See you soon!